astonishing. I'm delighted that we're talking about things that relate to our deficit. We should have been doing this for a long time, and I appreciate the fact that we are. Recognize, of course, that this is not about gathering information and making decisions. We've never met as a committee on these things privately. You're seeing our full discussion of tax code right now. We're here to perform for an audience, but the joke's on us, because basically no one's watching. Right? This is not something that the American people are tuned into. That doesn't mean it's not important. I will note that things, it's not my quote, but it comes from another famous economist, that things that can't go on forever won't. And continuing to spend massively more than we take in and adding every year massively to the national debt will not go on forever. And unless we deal with it in a constructive way, we will have a financial catastrophe at some point. I can't tell you when it is. Hopefully we'll deal with this issue and don't have the catastrophe, but that's going to be a challenge for us. I would note it's not just spending. It is both spending and taxing. You have to do both in order to reach balance. If somehow we were able to magically stop all spending other than military that we vote on every year, we eliminated all of government. Kept in place, of course, the entitlements that are mandatory, but all the rest of the government we got rid of, we still have a deficit. So we're going to have to look both at spending and taxing. I keep hearing this idea that there are corporations that are very profitable that pay no tax. Now, I can't figure out how that is, because if they're following the government tax law that we've written and that Congress has approved and the president signed, and they have a profit, they have to pay a tax on that profit. Is that right, Ms. Anderson?
There are many tax avoidance strategies from
No.
Yeah.
Answer the question. If a company follows government tax accounting policies passed by Congress and the president and shows at the end of the year, let's say $1 million profit, they have to pay a tax on that profit of 21%. Is that right?
Unless they're getting other tax credits that balance that out.
But if they have other tax credits, that means that's following the government account, the things we've passed in Congress. My point is this, which is companies that are profitable under the law that we've passed are paying full taxes. So if you think there are companies out there that are massively profitable that aren't paying taxes, that's just not true.
I wish
what
there
it
was
says
more
is,
transparency.
excuse me, I'm speaking now, not
your
turn. So what that says is, if we don't like the taxes companies are paying, then let's be honest about it and change the federal law. But companies are paying taxes as we have passed them. What's being said is dishonest when people say, oh, all these companies are earning all this money. What they're referring to, I've tried to ask, what are you talking about? They say, oh, we're talking about Wall Street accounting, not government accounting. You see, companies are paying full taxes under government accounting, but then the politicians look at Wall Street accounting and say, oh, they're making profit there, they should pay a tax on that. That's a different matter. So let's be honest in how we deal with that issue. CEO pay as a ratio. The idea you indicated we should pay or charge CEOs based upon the ratio of their pay to their lower employee wages. Do you know what companies would do in that circumstance? Think about unintended consequences. And that is, companies would separate their employees between two different companies. And low-income people would be part of one company, and higher-income people would be part of the other. All right? You have to recognize that the kinds of things you're suggesting have massive unintended consequences. The idea of taxing people based upon their assets, which Dr. Stiglitz suggested we had to do, based on their net worth, not their income, but their net worth. Do you know what that would do? France found out. They tried that. They had 60,000 multimillionaires leave the country over the course of about a decade. They stopped doing it. There's no other country in the world that taxes people based on their assets, because they realize people flee when that happens, move assets other places. Unintended consequences. Look, we're going to have to do things that do raise additional revenue, and we're going to have to do things that cut spending. We've got to do both, but we've got to be honest with each other if we're going to do that in a reasonable and fair way. And I would note, just as a small subpoint, the idea of eliminating the tax-free step-up at basis and death is one thing we ought to look at and probably make sense. All right? I do think that when we look at taxes, we have to say, which things can we adjust that won't hurt the growth of the economy? Because most of what's been described today is, in my opinion, going to be highly detrimental to the growth of the economy and the capacity of America to create jobs and lead the world. Don't forget, our economy is leading the world. Don't broke what ain't, or don't try and fix and break what's actually working pretty well. And let's fix things that we can to finally rein in the excessive spending and deficits that we're seeing. Mr. Chairman?
Thank you, Senator Romney. Senator Van Hollen.
Thank you, Mr. Chairman. Always good